So Darren, can you break down for us what is a zero coupon bond?
Sure. Bonds are not the most exciting topic, but something I've learned from working at Financial Enhancement Group that I never would have thought, just because you talk about the stock market all the time and you hear about the stock market, but the bond market is actually 3 times the size of the stock market. There are very, very wealthy people who buy and sell bonds, and it's at different times in history, it's been a very valuable place to put your money, and currently it's just not maybe the best place that makes the most sense for people's money for lots of reasons. There's different types of bonds, but it's important to understand that for a bond, they pay a coupon. So when you purchase a bond, you have a coupon rate. You have a par value. It says clearly what this bond is worth, and then you get paid a coupon based off of that value. And then when you hear about the Fed talking about potentially raising interest rates, what that does to your bond is that it works like a seesaw. If they raise interest rates in the bond that you currently own, as that new interest rate gets raised, now the value of your bond gets less. And it works in reverse. If they lower interest rates, then the value of your bond actually becomes a premium, starts selling at a premium. So interest rates affect what current bond values are. Mm-hmm. Zero coupon bonds are exactly that. They pay no coupon. And so people wonder, well, if I have a bond is paying me this income, this coupon every month or twice a year, depending on the type. But if it's paying me zero, why would I ever invest in a bond that pays me nothing? And it has to do with how it's traded. So it's not paying you a percentage coupon, but it is trading at a deep discount. So somebody who has a long-term investment that, let's say, hey, over 10 years, I want to have something that I can have at least 6% return on my investment. So let's say you put $25,000 into that. You want to have $25,000 at the end of this road. I have an assumed rate of return of 6%. How much should I pay for this zero coupon bond? So at the end of those 10 years, I get what I need. And you can run a calculation that actually gives you that yield. And so you're going in to buy that zero coupon bond at a discount. You don't get paid anything. But at the end of that road, when it matures, you get that full return. It's a very safe place to be. Mm-hmm. So it's a risk reward that you're looking at. Zero coupon bonds can be issued by the government. They can be issued by corporations, but they're issued for different reasons. That you do run a risk of a default sometimes because a lot of times a bond, you're paying for a debt obligation. Mm-hmm. And if they're not having to pay you an income, they may budget poorly and then end up having to default. So you're running that risk. Interest rates may not actually work out the way that you hope that they do over that 10-year period, whatever it may be. You hear people talk about potentially using this for college savings, laddering these bonds over time. So there's different ways to use them, but a zero coupon bond is exactly what it sounds like. It's you're getting a deep discount to buy it, but you're not getting income while you own it.
Sure.